We are also following breaking news on the economy. The Federal Reserve announcing a new interest rate hike just moments ago.
The Fed is raising rates by 1/4 point. It's the 4th increase this year as the Fed tries to stop stubbornly high inflation. NBC News business and data reporter Brian Cheung joins us now with the latest. So, Brian, we're expecting to hear from Fed Chair Jerome Powell in about half an hour. Walk us through the Fed's decision today.
Yeah, well, the decision, which comes out before the Fed chairman elaborates a little bit more on the decision to ultimately raise interest rates, announced that even though inflation has come down over the last few months, it still remains above the Federal Reserve's target of 2%. So they've been deliberately raising interest rates over the last year and a half or so to deliberately slow this economy, to try to make borrowing costs higher so that people don't spend as much, so that inflation can come down. Now, what's very interesting from that chart that we just showed is the Fed opted not to raise interest rates in their last meeting in June. So why the resumption of these interest rate hikes now? Well, the explanation from the Fed is that, yes, they are indeed watching and applauding the progress that they've made on inflation, and that now they can slow the pace of those interest rate increases, perhaps every other meeting, either way in intervals longer than perhaps 6 weeks. All of which is to say that because they're continuing to raise interest rates, the borrowing costs for things like your mortgages, for your credit cards, auto loans will remain elevated.
A quick yes, no, or maybe. Is this the last time we're going to see inflation rates go up?
Well, when we talk about the Federal Reserve's interest rates, the short answer is no. We've heard other Fed officials talk about, even before the decision today, that they could see the case for another 2 interest rate hikes perhaps this year. In fact, other economists are saying, well, if inflation doesn't get closer to 2% faster, then maybe they could do even more than 2 interest rate hikes. So it's far from done. But of course, we'll have to listen for what the Fed chair, Jay Powell, says in terms of what they could see as further actions later on this year. We have to remember that for the Federal Reserve, the last mile might be the most difficult for them. Yes, the rate of inflation has come down from 9% last year to 3% as of the last reading in June, but getting to that 2% could be really difficult because rent and also mortgage costs have gone up so substantially as of late.
That sounds like a solid maybe on interest rate hikes.
Exactly.
And I mean, Brian, you follow all this so closely. Was this expected today?
Yes, this was expected today, and markets had been preparing for the odds that the Federal Reserve would resume its interest rate hikes in this meeting. The reason being, again, yes, they've gotten inflation down, but it's not yet mission accomplished. Economists really want to see that inflation rate at 2%.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.